Hey there, welcome back to the Tax Buddy channel. I am Rajesh Kumarkar, and today we are talking about something super important, that is tax deduction for individual. Taxes can be confusing, but understanding deductions can save you a ton of money. So whether you are a self-employed, a freelancer, or just want to make the most of our taxes, stick around because I am going to break it down for you. But first, if you are new here, I'm your tax expert Rajesh Kumar Kaur. My mission is to make taxes less scary and help you keep more of your hard earned money. So grab a cup of tea and get comfortable and let's explore how you can save big with individual tax deductions. Are you ready for it? Let's dive in. In this section, we are going to cover ATC. In ATC, it is applicable for individual taxpayers and HUL. In this section, it provides for deduction from the gross total income, and the following are the investments contributions eligible for deductions. In these cases, I will explain you the contribution to public provident fund, contribution to approved superannuation fund, payment of LIC premiums, repayment of housing loan, only principal amount. Please note it down. Only principal amount. Tuition fees to any Indian university, college, school for full-time education of any two children. Subscription to any national savings certificate. Contribution to National Housing Bank term deposit scheme. Subscription to units of mutual fund. Any amount paid for term deposit for a fixed period of not less than 5 years with a scheduled bank. Amount deposited in account under the Senior Citizen Savings Scheme. Subscription to notified bonds of NABARD. Investment in 5 years post office time deposits. And any sum paid or deposited in Sukanya Samriddhi Scheme. I will explain you in a row. The PPF, NPS, PPF, these are this ATC. In this in this ATC section, you can claim up to 1.5 lakhs as deductions. Next point, AT triple C. In this section, if you invest or deposit or payment made to LIC or any other insurer in the approved annuity plan for receiving pension. In this section, if you have contributed any amount or 1.5 lakhs, whichever is lower, you can claim as deduction. In this 80CCC, there are two parts, 80CCD1 and 80CCD2. Let's another section, 80CCD. In 80CCD, it provides deduction in respect of contribution made to the pension scheme notified by the central government. In this section, you can say maximum deduction is 1.5 lakhs rupees. Next, 80CCD1. In section 80CCD1, any employees contributed or any individual contribution is very important. In this case of salaried individual, you can save 10% of his salary, you can claim as deduction. In case of further 20% of gross total income, you can claim as a deduction. For 80CCD2, any amount invested by the employer in case of central government or state government, you can save 14% of salary as deductions. In case of any other employer, you can save 10% of his salary as a deductions. Next, 80CCD1B. 80CCD1B, it is a additional deduction you can invest in NPS. That is called National Pension Scheme. Any amount deposited subject to a maximum 50,000 rupees. Please note it down. As per the section 80CCE, Maximum permissible deduction under Section 80C, 80CCC, and 80CCD1 is 1.5 lakhs. However, the limit of 1.5 lakhs under Section 80 CCE does not apply to deduction under Section 80 CCD2 and 80 CCD1B. Please note it down. Next, Section 80D. It is for medical insurance premium. Any premium paid as health insurance premium in any mode other than cash, any medical expenditure incurred and paid in any mode other than cash for the treatment of senior citizen for whom health insurance is not taken. In this section, a person can claim a deduction up to 25,000, 50,000 in case of senior citizen for health insurance premium paid for self, spouse, and dependent children for his family. A person can claim a deduction of up to 25,000, 50,000 in case of senior citizen for health insurance premium paid for self, spouse, and dependent children for his parents. As a welfare measure towards senior citizens who are unable to get health insurance coverage, deduction is also available in respect of any payments made on account of medical expenditure in respect of such persons. Please note it down. A person can claim a deduction of 5,000 in respect of payments made on account of preventive health checkup of self, spouse, dependent children, or parents during the previous year. However, the said deduction of 5,000 rupees is within the overall limit of 25,000 or 50,000 as the case may be. Next section is 80DD. In this section, we can discuss about maintenance including medical treatment of a dependent who is a person with disability. In this section, any amount incurred for the medical treatment, training, or rehabilitation of a disabled dependent. The dependent in case of individual can be spouse, children, parents, brother, sisters, and in case of HUF, any member of such HUF. In this case, dependent person with disability can claim flat 75,000 for deduction. In case of dependent person with severe disability, that means a person with 80% or more disability can claim a flat 1.25 lakhs as deduction. The next section is 80DD. In this section, if an individual or an HUF has incurred medical expenses for treatment of specified disease or ailment for self or dependent being spouse, children, brothers, or sisters, then such expense is allowed as deduction under section 80DD. In this case, actual amount paid of 40,000 in case of individual, 1 lakh rupees in case of senior citizen, whichever is lower, less the amount received from the insurance company or reimbursement by the employer. Please note it down. 40,000 for individuals less than 60 years, 1 lakh for senior citizens. In this section 80DD, there are some diseases or medical ailments specified under section 80DD. Neurological diseases where the disability level is certified to be 40% and more, like dementia, dystonia musculorum deformis, aphasia, motor neuron disease, chorea, hemiabolitionism, Parkinson disease, malignant cancers, full-blown acquired immunodeficiency syndrome, chronic renal failure, hematological disorders like hemophilia, thalassemia. In this section 80DD, how and from whom to take this certificate? This certificate can be signed by a specialist. Patients getting treated in a private hospitals are not required to take the certificate from a government hospital. Patients receiving treatment in a government hospital have to take a certificate from any specialist working full time in the hospital. Such specialists must have a postgraduate degree in general medicine or an equivalent degree, which is recognized by the Medical Council of India. Now, the certificate in Form 10I is no longer required, but the certificate must have name and age of the patient and name of the disease or ailments. Name, address, registration number, and the qualification of the specialist issuing these prescriptions is must required. If the patient is receiving treatment from government hospital, then it should be also mention the name and address of the government hospital. Now, next section is section 80E. An individual assessee who takes an education loan for self, spouse, children, or a student of whom the individual is a legal guardian, it is eligible to claim this section 80E. An individual can claim a deduction of interest paid on loan taken for pursuing higher education. The deduction is allowed on the total interest amount of the EMI paid during the financial year. There is no limit on the deduction amount. In this section, the benefit of the deduction is available for 7 assessment years immediately succeeding the initial assessment year, or till the interest is paid in full by the assessee, whichever is earlier. Now come to the next section, that is called 80EE. An individual who has taken a loan for acquisition of a residential house property from any financial institution, interest payable on such loan would qualify for deduction under this section 80EE. In this section, you can claim up to 50,000 rupees as deductions. Under section 80EE is over and above the deduction of up to 2 lakh rupees available under section 24 for the interest paid in respect of loan borrowed for acquisition of a self-occupied property. But here is the some certain conditions for availing the section 80EE. First thing is the loan should be sanctioned during the previous year 2016 or 17. The loan sanction is less than or equal to 35 lakhs. The value of the house is less than or equal to 50 lakhs, and the assessee should not own any residential house property on the date of sanctioning the loan. In this section 80EE, the benefit of the deduction under this section would be available till the repayment of the loan continues. Now come to the next section, which is section 80EEA. In this section, the individual assessee who takes loan from a financial institution for a acquisition of a residential house property. In this section, the following conditions must be satisfied for the claiming deduction under section 80EE. The first condition is the loan has been sanctioned by the financial institution between the period of 1st April 2019 to 31st March 2022. The stamp duty value of the house property does not exceed 45 lakhs. The third point is the assessee should be a first time home buyer. Please note it down. The assessee should be a first time home buyer. The taxpayer should not own any residential house property as on the date of sanction of the loan. And the last and important point is in this case, you can claim up to 1.5 lakh rupees as a deduction. And in this section, there is a very crucial point is the deduction under section 80EEA of 1.5 lakh rupees is over and above the deduction available under section 24B. Now, into the next section, the section 80TTA. 80TTA, it is going on the deduction in respect of interest on deposit in saving bank. In this case, an individual and an HUF, you can claim up to 10,000 rupees if you are investing in the saving bank account. In this case, deductions available for interest income earned by the assessee on its saving account in banking company to which Banking Regulation Act 1949 applies. Cooperative society engaged in carrying on the business of banking, including a cooperative land mortgage bank or a cooperative land development bank. Post Office, as defined in Clause K of Section 2 of the Indian Post Office Act, 1898. Please note, for Section 80 TTA, you can claim up to 10,000 rupees for interest on deposits in saving bank. Now come to the next section, Section 80 TTB. In this section, you can claim up to 50,000 rupees as deductions available from the interest on savings bank deposit, recurring deposits, and fixed deposits. In this section, you have to claim a maximum 50,000 rupees as a deduction. And that's wrap up of our discussion on individual tax deductions. I hope you found this video very helpful. If you have any questions or topics you'd like me to cover in future videos, feel free to drop them in the comments below. Don't forget to like this video and subscribe to this channel for more tax saving tips. Thank you for tuning in, and until next time, take care. Bye bye.